All right, let's talk some policy. Let's talk some Fed. The two certainly overlapping, as Jerome Powell's first question out of the gate was about the president and their interaction. Mike Townsend joins me alongside Collin Martin, a great team for this discussion. Mike is the managing director in legislative and regulatory affairs. Collin Martin, director and fixed income strategist. Good afternoon, guys. Mike, how do you think Powell handled that question about the president?
Well, I think we've seen Powell handle these questions for a long time now, and I think we're going to see it at most every press conference going forward in the rest of the year. But you know, he kept returning to the fact that we're here to watch the data, and we're going to watch the data and make our decisions based on the data. We're not going to worry about outside pressure. We're not going to worry about the threats to our independence. We're just going to focus on the data. I think you're going to hear him say that over and over the course of this year.
Why do so many people seem to doubt that the veracity of that strategy and statement, Collin? It seems like they are watching the data and responding to it. They started hiking, they slowed down, they reversed, they started cutting, they slowed down the cuts to wait. Like, where's the cynicism around that?
I don't know, Oliver. We don't have cynicism here. When we look at the Fed, we think they're doing their best. And I think if you look at what we've seen over the past few years with what started as, an innocent rate hike cycle that soon, snowballed into a very aggressive rate hike cycle, and then when will they cut, by how much? It all stems down to the nature of this recovery and how funky things have been in this post-pandemic world, where a lot of the relationships that held, given such an aggressive Fed hike cycle, they didn't really come to fruition here. So we think they're doing their best. We think that they're going to try to tune out all the noise. There was even a follow-up question, and Powell made it very clear that they're not listening to any other elected official, and they're literally just looking at the data. So they're going to keep doing that. They're going to look at growth. They're going to look at inflation. They're going to look at the labor market, and that's going to dictate their policy moves for the next few months.
Okay. Mike, there is, though, obviously going to be some fairly public pressure, it seems, to lower rates. If I were Powell, I feel like if I got that call from the president, I might just say, hey, I did lower rates and yields went up, dollar went up, so maybe just let me do my job.
Yeah, I think that's right. I think he would say that. And I think the reality is that there's just so many uncertainties with policy right now. Probably the biggest news of all the crazy things that have been going on over the last 9 days is that you still don't have anything really specific on tariffs, when they'll start, where they'll be, that sort of thing. So I think the market is certainly watching that. And I think the Fed is sort of in a place where they've got to wait and see how some of these policies sort themselves out, whether it's trade policy, immigration policy, down the road we got taxes and a debt ceiling fight. Now, all these things could impact economic growth. They could impact the jobs market. That's what the Fed is going to be keyed in on. And I think he would tell the president that, give me some specifics and let me see how they actually work and play out in reality. And we'll do what needs to be done at that time.
What about the economic discussion, Collin? It seemed like this was the most sort of neutral and to the point of data dependency. No one had answers. Powell's basically just saying the reporters did a good job, I think, highlighting a lot of the economic kind of competition of narrative, sticky inflation expectations, it's pretty strong economic numbers generally, but also obviously cracks in some of the employment measures here and there, and some survey measures about difficulty finding jobs, et cetera. What did you make of was there any bias anywhere in his economic understanding?
I'd say no. I didn't see any bias. He was very neutral, and he used the term he uses a lot, that the economy's in a good place right now. And I think there was a snap reaction in the markets if you looked at the statement, because we didn't get any updated projections this time around. All we had was the statement at 2:00 Eastern, and we saw yields rise because of the little shift where they shifted the discussion about inflation, and they acknowledged that it's no longer moving or progressing towards the Fed's 2% target, and it remains elevated. That's a factually accurate statement. I think if they kept in that it was progressing, people would look right through that. The fact of the matter is inflation is still too high right now. Powell mentioned that maybe it could trend a little bit lower, and we saw yields come down once he mentioned that housing could become a disinflationary force going forward. But other than that, things are okay. The labor market is solid, as the statement said. We got this little deterioration that started last year, and then it's since come down. and things are looking pretty good right now. So there's any number of outcomes that we can see given all the uncertainty around Trump's policies. Powell acknowledged that their teams are running all these scenarios, but as it stands in the here and now, things are looking okay.
Okay. Mike, what are you hearing? What are the whispers for the next big policy move? If he can't tamper with the Fed and he's already started swiping the pen and on energy and oil-related stuff, immigration stuff, what comes next?
Well, Oliver, what you're seeing right now is some pushback, obviously. I mean, he's had a couple of things stayed by the courts. I think we're going to see a lot of court action in the coming weeks on some of these proposals. The other thing I'm watching, Oliver, is Congress is really struggling to figure out how to put some of these policies into place. It's going to take a while. The House Republicans had a retreat earlier this week. Trump spoke there, but they emerged from that retreat without a concrete plan on how to do things like debt ceiling and government funding, which has a mid-March deadline. And I think that's reflective of how narrow the margins are on Capitol Hill. And not all Republicans are 100% aligned on everything. So I think some of these policy things are going to take longer than the president would like, and maybe longer than the markets would like to sort out.
Well, I think that's kind of what some of the coiners might be feeling right now, because their team's gonna have to spin up a report and submit it within like 3 to 6 months. So some of this stuff we got to wait on. Collin, how about inflation on Friday? We're not done for the week here, of course. That's a number that's supposed to show a somewhat significant rise.
Yeah, a modest rise. I think a modest rise from the previous month's number, from November's number, which was a good number. So I don't think it's expected to show a sharp spike, but on a year-over-year basis, it's still likely to show that it's elevated. And that's something that Powell highlighted in the press conference today, that the 12-month sum is that something they're focusing on, and it's sort of flatlined both at a headline and core level. But that's going to be the main focus over the next few months. If we look at what the Fed's dual mandate is, I don't think they're worrying too much about the labor market. Obviously, they don't want it to weaken, but it doesn't look like that's happening right now. All eyes are going to be on inflation, and if it resumes its downward trend. Something that I've been reminding our clients about is how quickly things can move. And you alluded to this earlier in our discussion, Oliver, how we've kind of been whipsawed with the markets and the economic data. And while right now inflation is sticky, we're not convinced that it's going to just stay here indefinitely. We think there are some forces that could be in play that could bring it down gradually. Of course, the incoming policy proposals from Trump could throw a wrench in that. But when we're looking at the data now, we're not convinced that we'll see inflation, consistently stay above 3%, for example. We think over time it could gradually decline.
And to that point, market doesn't seem too worried about it right now. Bonds, a little change. We might just go unch on the 10-year into the bell here. Thank you very much.